Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe. It is Monday, the 20th of October. Starting off with the S&P, where I suppose in the recent past there have been three attempts at crashing the market. After all, it's October and it's crash season. Previously, we had the shutdown fears, then we had the China tariff scare, and then finally last week we had the US credit control scare as well, sort of small loans, personal finance loans, etc. But the markets withstood all of those and actually bounced above a rising 50-day line, which is a continuation signal on the upside, as is the RSI 50 rebound that we had at the end of last week as well. So just need a breakthrough back through 6,700. And we could be looking at a journey towards 69.30, the top of that rising trend channel from April, as soon as the end of next month. I suppose we could even start daring to dream of a move towards 7,000 by the end of the year. On the downside, 65.50 seems to be the magic number or the magic area for support if we do have a rug pull, which is obviously still being tried at the moment. Moving along to the Nasdaq 100, and here prettier picture in some ways than the S&P, even with the 50-day line above 24,000, 24,100. We've had RSI rebounds, two or three of them, above the neutral 50 level, and also if you look closely, you can see that we've had bounces for this market well above the 50-day line, as opposed to the beginning of last month where we actually had to test the line. So in a way, this market is stronger than it was a month ago, despite the attempts at bringing it down with AI bubble scares and everything else. Top of the channel there from April up towards 26,000, and that's sort of meeting the late January resistance line projection, heading towards 26,600 as a best case scenario target for the end of next month, while we remain on the right side of 24,000. Not really expecting anything worse than 24,000 now, even if there is a rug pull, but obviously the door is open if the market wants it. Here you can see now we move on to the stocks, and Achieve is the first one of those. Achieve Life Sciences. Here we've gapped through most of the recent resistance. The only thing left at the moment is the $4.20 area, which hopefully will be broken again, or $4.30 actually, just through that peak that we had back in June. End of day close above that, we're looking at $5. Hopefully as soon as the end of this month. Reason for the inclusion here, apart from the gap higher, is also the way that we've had a gap. We had a gap down in June and then gapped up now. So it's a bear trap island reversal, and that tends to be a very strong setup. Ideally, whatever happens, we stay on the right side of recent broken resistance at $3.90. Situation which we have looked at recently is Carbon Revolution, and here gapping through the 50-day line at the end of last week, and gapping through most of the recent resistance around $4.95, let's call it. Above that, we're looking for a spike towards $8, perhaps as soon as the end of next month. Ideally, we stay above that rising 50-day line, whatever happens. Next on the list is a situation which hopefully will do the job for the bulls. And here you can see that it's coming up in the form of, if I can type it out properly, in the form of Liberty Energy. And here you can see that we broke the 200-day moving average there at $13.80. Above that, looking for the top of the rising trend channel base there at $18.60 as soon as the end of next month, or even sooner. If we're lucky, might even get there by the end of this month. Onto a new name, and it's Magnitude International. Here we've got the shares bumping along the bottom for quite some time. The bottom there in terms of the resistance has been $1.55, and we've also broken through the 50-day moving average at $1.57. Above that, hoping for a spike towards $3 by the end of next month, which is the top of a rising trend channel from back in August. Next situation is NextCure, and here we've hit our first target there around $11.35. Above that, we're looking for the upper parallel of that rising trend channel base from back in November, or December rather, as high as $19. Looking for that perhaps as soon as the end of next month, if we can stay on the right side of recent resistance through the $10.80 level. So giving the shares $1 for a potential $6 or $7 upside over the near term. Tianci is next, and here you can see that it's a broadening triangle base, the base in place hopefully since the July period, we've broken above the 50-day line there, just under 75 cents, and above that looking for $1.50 at the top of that broadening triangle. Helped along by the way that the RSI has hopefully cleared the neutral 50 level in a meaningful way for the last time after the recent gap close buy signal that we had on the 15th of October. On to the last two, the first one coming up, and one that perhaps needs to be typed out carefully, VisionWave Holdings. And here you can see that we've got a potential basing situation. What's interesting here is that the shares managed to break through the 50-day line, then went sideways, but at least they have remained above it. That's now at the 38 cents level, but above recent broken resistance, or the latest broken resistance of 71 cents. We are looking for a target up to $1.90, hopefully in coming days. Maybe give it as long as the end of next month. In terms of a stop loss, probably half Friday's range, or just around that amount, the $1 area, a reasonable place to do it, given that this is a volatile situation. Finishing off with VNet X, and here you can see that we hit the top of that rising trend channel from April quite hard and came back. The top of the channel there up to $30, that's what we're looking for, perhaps over the next 2 to 4 weeks, while we remain above the old resistance there around $21.60 and Friday support around that level as well. So above $21.60, looking for $30 on VNet X. That's it for me today. More updates tomorrow.